The American money system wasn't built to make you wealthy. It was built to keep you dependent. This is the blueprint behind the dollar, the hidden architecture that shapes your debt, your spending, and your future, whether you realize it or not. Welcome to Wheelixon, where every story reveals how money, power, and history shape the world we live in. Here, we uncover the patterns behind inflation, crashes, empires, and the lessons they left behind. Chapter 1. Money isn't what you think it is. If you stop a random American on the street and ask, "What is money?" you'll get simple answers. It's dollars, it's cash, it's what you buy things with. But ask a central banker, ask an economist, ask the Federal Reserve, and the answer becomes much darker. Money is not wealth. Money is not value. Money is not savings. Money, in the American system, is debt. Every dollar in your wallet was created as a loan. Every dollar in your bank account exists because someone, somewhere, borrowed it into existence. The blueprint behind America's money is built on one radical idea. You must always owe something, so the system can always control something. That blueprint didn't appear overnight. It was engineered piece by piece, law by law, crisis by crisis, until the American economy became a machine powered not by production, but by dependence. Chapter 2. The day America gave up control of its money. To understand the blueprint, we go back to 1913, the year the United States handed its monetary power to a new institution with a strange name, the Federal Reserve. Most Americans think the Fed is part of the government. It's not. It's an independent central bank, a hybrid creature designed to be beyond voters, beyond Congress, and beyond political cycles. The Fed has one core power. It creates money, not by printing bills, but by expanding the balance sheets of banks, buying government debt, and injecting liquidity into markets. In simple terms, the Fed creates digital dollars and the banking system multiplies them. This was the beginning of the dependency blueprint. Because once a nation gives control of its money supply to an unelected institution, dependence is the only possible outcome. The government becomes dependent on the Fed to finance deficits. Banks become dependent on the Fed for liquidity. Businesses become dependent on low interest rates. Consumers become dependent on cheap credit. The system doesn't want independence. It wants interdependence, where nobody can function without it. That is the essence of control. Chapter 3. The blueprint expands. Money becomes credit. Before the modern era, money had limits. Gold had to be mined. Silver had to be minted. Paper had to be backed. But after the Federal Reserve was created, a new model replaced the old one. Money or credit. Credit or redact money. Every time a bank issues a loan, new money is created. Your mortgage? New money. Your car loan? New money. Your credit card balance? New money. Banks don't lend existing money. They create it. This is why the system feels like it pushes you to borrow, because it does. Your debt isn't a problem for the system. Your debt is the fuel of the system. The more you borrow, the more money exists. The more money exists, the more the economy grows. The more the economy grows, the more the government can borrow. Money creation is no longer tied to production. It is tied to your willingness to be indebted. That's the blueprint. Chapter 4, 1971, the master switch that locked independence. For most of history, the US dollar was tied to gold. You couldn't print unlimited money because you couldn't produce unlimited gold. But on August 15, 1971, President Richard Nixon ended the gold standard forever. The dollar was no longer backed by metal. It was backed by belief and by the economic dominance of the United States. This moment did something irreversible. It gave the government a limitless credit card. It gave the Fed limitless money creation power. It turned the dollar into pure fiat, value based on trust alone. And once money has no physical limitation, the only limitation becomes how dependent the population is willing to be. Prices began rising faster. Wages stopped keeping up. Debt became necessary for survival. The American system quietly shifted from work, earn, save, to borrow, spend, repeat. This wasn't an accident. It was the architecture of a new blueprint, a blueprint built on dependence. Chapter 5. The petrodollar. The blueprint goes. Global ending. The gold standard created a problem. Why would the world trust dollars that were backed by nothing? America needed a new anchor, a new foundation. So it created one through a deal with Saudi Arabia. Saudi oil, and eventually global oil, would be priced only in US dollars. This single decision forced every nation on earth to demand dollars. Japan needed dollars. Europe needed dollars. China needed dollars. Africa needed dollars. Suddenly, the world depended on US currency for the most essential resource on earth. And that dependency gave America enormous power. The domestic blueprint became the global blueprint. The world now ran on American money. American money ran on American debt. American debt ran on the Federal Reserve. And the Federal Reserve ran on the belief that America would never lose its dominance. But every blueprint has a flaw, and America's flaw is simple. To keep the world dependent on dollars, America must stay dependent on debt. That is the part few people understand. Chapter 6, the dependence trap. You can't opt out. The richest Americans hold assets, stocks, real estate, businesses, but the average American holds liabilities, mortgages, car loans, credit card balances, student debt. This is not accidental. The blueprint pushes households into cycles of borrowing. Low interest rates make loans look cheap. 2, asset prices rise faster than wages. 3, savings become impossible. 4, people borrow to maintain lifestyle. 5, debt becomes permanent. 6, interest payments drain income. 7, the system gets stronger, you get weaker. This is not a conspiracy, it is a structure where your debt creates money, your spending creates demand, your dependence creates stability. The American consumer is not failing, they're performing exactly as the system expects. Chapter 7, inflation, the silent tool of control. If the blueprint had a signature weapon, it would be inflation. Inflation is not an accident, inflation is policy. It quietly reduces your purchasing power, erodes your savings, forces you to borrow, increases government tax revenue, reduces the real value of government debt, keeps the economic machine running. Inflation is a hidden tax, the most powerful tax ever invented. Because unlike income tax, you can't see it, you just feel it. Higher rent, higher groceries, higher health care, higher everything. Inflation is how the system keeps you moving, dependent, striving, borrowing. If money stayed stable, people could save. If people could save, they wouldn't need credit. If they didn't need credit, the system would collapse. Inflation is the glue that holds the dependency blueprint in place. Chapter 8, why Americans can't escape the blueprint. Most people try to break free if I save enough, if I invest enough, if I work hard enough. But the system is designed so that the cost of living outpaces wage growth, essential services inflate faster than income, housing becomes unaffordable, education becomes debt-based, medical costs dominate savings, retirement becomes harder to achieve. You don't. Decode escape the system and being good at the system, because the system relies on your dependence to function at all. America needs consumers who cannot stop consuming. It needs workers who cannot stop working. It needs borrowers who cannot stop borrowing. Your personal independence is the system's greatest threat, so the blueprint makes independence as difficult as possible. Chapter 9, the truth. The blueprint doesn't want you to notice. The American money system is not built on freedom, it is built on friction. You're free to spend, but spending makes the system stronger. You're free to borrow, but borrowing traps you deeper. You're free to invest, but asset prices are inflated by the blueprint. You're free to save, but inflation makes saving pointless. This is not failure. This is not corruption. This is not incompetence. This is the blueprint working as intended. Because dependent citizens are predictable citizens, and predictable citizens are profitable citizens. Chapter 10, so what's the end game? Every blueprint eventually reaches a breaking point. The American system has 3 unavoidable vulnerabilities. 1, debt dependency. The U.S. must borrow forever to keep the machine running. 2, inflation. Dependency, inflation must stay positive or the system collapses. 3, global trust. The world must keep believing in the dollar. If any of these fail, the blueprint cracks. Does that mean collapse? Not necessarily, but it means transformation. And transformation is rarely gentle. And we are living in the age where the American blueprint will be tested like never before. Whether it breaks or evolves depends on forces far larger than any individual. But knowledge is the first step toward independence. And that's why this channel exists. If this video helped you finally understand how the American money system really works, then you already know why this channel matters. Here at Wheelixon, we decode the hidden structures controlling your wealth, your economy, and your future, in a way schools, politicians, and media never will. Subscribe to stay informed, stay alert, and stay ahead in a system designed to keep you dependent. See you in the next video. Bye.